Welcome to today's market report.
European stocks made cautious gains on Wednesday, pushed higher by commodity-heavy stocks with Russian-Ukraine tensions in focus, while Swedish telecom firm Ericsson slumped after investigations showed misconduct. The continent-wide Stoxx 600 index ended 0.1% higher, with oil firms and miners leading gains, marginally adding to the 1.4% jump on Tuesday when Moscow indicated it was returning some troops surrounding Ukraine. However, concerns lingered after the United States and NATO said Russia was still building up troops around Ukraine, and Kiev appeared to blame Russia for a cyber attack. Shares of Ericsson fell 14.2% to be the top Stoxx 600 loser after the Swedish telecom gear maker disclosed the results of an internal investigation that detailed suspect payments and misconduct in Iraq. Riskier assets have been hammered in the past weeks, with volatility gauges jumping to January highs on fears that Russia will invade Ukraine, while surging oil prices added to inflation fears. A lot of the risks seem to be in the price, but we could not make an investment decision based on a geopolitical event, according to RBC. Historically, acts of war tend to have relatively short-lived impact on markets, except if it is an oil crisis, which itself triggers a recession. UK FTSE 100 slipped after data showed consumer prices rose at the fastest annual pace in nearly 30 years last month, boosting bets that the Bank of England will raise interest rates for a third consecutive time. GBP/USD rallied to a fresh hourly high on Wednesday following a sell-off in the greenback on the back of a less hawkish outcome at the Federal Reserve's meeting in January. The minutes of the meeting did not underscore the possibility of a 50 basis points hike at the March meeting, which knocked some wind out of the dollar and yields. The daily outlook is somewhat trapped around 135.20 and 136.50. The shared currency extended its rally, so far up 0.4% in the week, trading at 113.79.
This is today's market news. Thanks for listening. We'll see you next time.